Hello traders, Gary Wagner here. It is approximately 11 o'clock in Honolulu, 5 o'clock in New York on Tuesday, 12th day of September 2023, and this is the Daily Report for Gold and Silver. Before we look at some charts, I do want to look at the Kitco Gold Index to show that today's decline in gold pricing, both spot and futures, was primarily the direct result of traders bidding the precious yellow metal lower. In the case of spot gold, it is currently fixed at $1,912.80. That is a decline of $9, of which $8.80 is a result of trading, with an extremely fractional decline, the direct result of dollar strength. That's only 20 cents out of the $9 decline today. This first chart is a daily candlestick chart of December gold futures. It clearly shows the decline today, currently down about $12.10. I was hoping that gold would hold at approximately $1,939, the low that we have seen from Wednesday of last week up until yesterday. Today breaking below that key level, the 61.8% retracement, touching down to a low of approximately 1929 before slightly recovering. Unfortunately, today's decline did affect our current trade, going through our stop at 1937. Full details of our last trade will be posted on today's members page. In terms of what we could expect, depending on how the CPI report comes out tomorrow, if it comes out well above or below the anticipated rise that was forecast by the Wall Street Journal poll of economists, we could see increased volatility. If we have increased downside pressure, 1926, the 78% fib retracement, down to about 1920 is where I would look for support. And I do believe that there's extremely strong support at 1910 to 1915. If traders try to push gold prices higher after the release of tomorrow's CPI report, we need to look at the former level of support of $1,939 as a potential area for resistance, with major resistance occurring at approximately $1,947. That is the 50% retracement from $1,914 up to $1,980. We will remain flat as the CPI report comes out. Let the dust settle and reestablish our strategy from there. As we spoke about when we looked at spot gold at the beginning of the show, the dollar really was flat today, as you can see, forming almost a pure doji, opening at 104.208 and currently at 104.211. Not much change whatsoever, although dollar strength has been a strong factor in pressuring gold to lower pricing since about the middle of July. It was not that today that caused the $12 drawdown. On a technical basis, if the dollar strength returns, we want to look at this recent top anywhere between 105.22 up to this high at 105.475, the intraday high that occurred back in March. Lastly, I do want to take a look at silver. Unlike gold, silver closed unchanged to fractionally higher, up 0.08%, currently taking the December futures contract to $23.40. On a technical basis, when we look at this daily silver chart, today's low did not in any way violate the recent lows that we have seen starting on Wednesday of last week through yesterday and today. In fact, it looks as though silver is attempting to find some kind of a base at roughly $23.10. However, if silver does find support down near these lows and attempts to stage some sort of rally, we have to look back through December, January, and February, when silver was trapped in a sideways trading range for 3 months between approximately $23.40 on the low and the high of $24.70. Because although this particular price point at around $23.60 seems to have been a level of support before breaking hard to the downside, that level of technical support became resistance once silver broke through that price point last week. This has been Gary Wagner wishing you as always good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.